Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's figure out what is happening on another green day for Tesla and just really what to expect moving into the rest of this month. So yeah, with all that being said and done, let's just jump into it. If you enjoyed, don't forget to hit that like button. This is not financial advice and I am not a financial advisor. And of course, my membership section is live. That link, of course, is down below. If you're interested for my updates, thoughts, posts, analysis, technical analysis, of course, options flow, etc. on Tesla every single day the market is open. Again, for just $3 a month. If you're interested, that link, of course, is down below. Definitely check it out. We'd love to have you. And it's not a Discord link. It is a YouTube membership link. Keep that in mind. But jumping into a Tesla, closing the day up just over 2%, closing at 251.5, which compared to the market is actually roughly in line with the market. The market, for instance, QQQ is up pretty much percent, which is pretty in line for Tesla to be up about 2%, give or take. So everything kind of makes sense. Now let's talk about it. The first thing I want to talk about is going to be this on the daily chart. This is the first thing I want to talk about. So there's two things here, right? I'm trying to figure out the order I want to talk about. Okay, we'll talk about this first. So mainly because I have it drawn. Is this cup and handle potential, right? So like I said, we have trend lines. If we go to the weekly here really quickly, you can see that we did pretty much break up above this trend line. Even on the, not the linear chart, but the, my goodness, I'm like completely blanking out. I wrote it down here. Hold on. I'm like, my mind, the log chart, that's the one, sorry. The log chart, right? This is the log chart I have right now, right? So people on the linear chart were talking about the breakout, which it did, right? But keep in mind, even on breakouts, the next thing you usually do is you come back down and retest it. But on a bigger time frame that we're looking at, like this, like the daily chart, we're looking at several years of candles over here. The log chart tends to be a little bit more accurate, right? It weighs things a little bit better. And even on the log chart, if you zoom in really closely here, you can see, we are definitely dancing with a breakout on the weekly chart here. It's looking phenomenal. This is definitely a bit of a peekaboo, a breakout. Now, again, I wouldn't say it's the most convincing breakout in the entire world, but it's, it's still breaking out. That's still a damn good sign. Now, obviously, there's still more work to be done because we have things like false breakouts, right? Can we keep this? Can we hold this next week? That's going to be the question, in my opinion. Can we hold this breakout next week? That'll be important. But trend lines, like I always say this, trend lines are a little bit on the subjective side, right? You can draw them many different ways. For instance, I could have drawn it simply going like this instead and connecting more of the candles. And now we really broke out. So there's so many subjective ways, whether or not I drew it on the log chart or the linear chart. Again, I always say this and I'll continue saying this. Trend lines to me, they're very useful, but they're very rough guidelines because again, they could be extremely subjective, right? What isn't subjective, however, are horizontal lines, horizontal levels, resistances, supports, trends. That's not subjective. Doesn't matter what chart you're in, doesn't matter where you're drawing your lines. There's only real one way to do it, at least in my opinion. And this is the way I look at it. And this is what I have this cup and handle here for, right? So obviously we had this massive pivot point all the way back here, pretty much late last year, December of last year, right? We had this massive inverted hammer candle, bearish hammer candle on the weekly chart. And we pretty much downtrended pretty substantially ever since then and went down all the way from 260 all the way down to about 140, we'll say, right? Massive downtrend. Obviously, we've pretty much regained all of that so far, which is good. But usually when you have these downtrends, and we've been in a downtrend for quite some time, it's very common to get, some form of reversal patterns, right? Some overall reversal patterns. And this is going to be on the weekly. You can look at it on the daily, same idea. We can look at it on the daily, right? Same idea. But the idea here is the fact that, so like I said, breaking out of the trend line is great. It's obviously it's really, really good. But what I really care about, like the thing that really makes me convinced that the long-term trend has officially changed to being bullish, right? Because medium term is bullish, short term, I would argue is a little bit bearish. Medium term is bullish, long term is still technically bearish. What really flips that though is breaking above this 265 pivot point that we had that pretty much started this downtrend substantially. This very aggressive downtrend we've been in for, the majority of this year, except for the last month or so, right? That is going to be what started it. So that to me is still technically the actual previous higher or the previous high to break, to set a fresh higher high to really cancel out this downtrend that we are currently in still. Even right now, we're still technically in it, in my opinion, even though this downtrend or this trend line break has technically occurred. In my opinion, the real break of it and the real change in shift is going to be a 265 break. Now, the thing I look at it is this. One thing that this also sets up is this cup and handle pattern. So if we do come up, which I think we can, and I'll explain why, a little bit higher, and maybe Monday, right? Probably Monday actually. 255, if I zoom out, you'll see the, the volume profile starts to increase substantially around 255 to as high as 265, right? So if we do move a little bit higher and we get to somewhere around 255 to 265, somewhere in that general range, which I think is possible, and that's where we finally reject, and that's where the rejection comes in, and that's where we get a pretty decent sell-off potentially, right? that is where this cup and handle pattern starts to come in. The neckline will be very obvious. It'll be somewhere around 265, of course. Really depends on where we break or where we reject and where we start the correction. But that would start this potential cup and handle pattern. What that would do is it'll start potentially, again, this is just potentially, doesn't mean it has to. This could just be a, there's another name for this pattern. It's just the same thing, but without the handle, and it just breaks right through. And essentially it'll look something like this. You have this, and you break like this, you come back down, retest it, and you move up. That could also be a thing. That is definitely a possibility. But with how overbought we are, it's hard for me to see this to move up that much more aggressively without some cool off. Like, it doesn't matter how much of a cool off, but some cool off, because every single indicator, like if we've opened up the RSI, it's reaching some pretty substantially overbought territory. Stochastic, the exact same thing, reaching some pretty substantially overbought territory. I mean, this stochastic is arguably even setting up potentially the most overbought stochastic we have ever seen in Tesla's potentially even history at this point, with how high this green line is, right? So, you know, we're in pretty crazy levels of overbought. In all honesty, just it is what it is, right? But again, it doesn't mean it has to cool off here, it has to crash or whatever. But if it were to, and if it were to set up this potential cup and handle pattern, which this handle would be that reset of the stock, you know, you can measure where we go from the Fibonacci, right? You go from the swing high. So let's just say we go up to 265. Let's say we actually move up to 265 as an example. Doesn't mean we have to, but just for example purposes, right? 0.32 is sitting at about 216. 0.5 is sitting at about, what is this? About $200 per share. And the 618 is sitting at about 186. So these are the levels, the main three levels I'd be looking at. I'd be surprised if we go down to 186, but anywhere between 0.32 to 0.5, which is about pretty much $220 to $200 per share, would not shock me if we do come down there, which again, from here, wouldn't be that much of a drop. It would be like maybe, you know, 13% drop for Tesla, which isn't that much. Sometimes it does that thing in like 2 days, right? But if that were to happen, that would be setting up the handle pattern, right? We would kind of zigzag in this handle like this, and then we would break out. And if we do this, and if we do break out and this handle forms and we break out and we go above 265, I think the move up is going to be pretty substantial. Like, I really think it'll be pretty explosive, pretty similar to what we've been seeing the past few days. It'll just take some time to kind of rebuild this momentum, especially as we're entering potentially after July, as we start slowly entering September or closer to September, one of the worst months, if not literally the worst month for the market in general. That could be the month where we also really start kicking in this, you know, potential cool off into a higher gear, really set up this handle for this cup and handle pattern. And then of course from there, assuming it holds, we go up and melt up substantially higher, break above 265. And in all honesty, I think above 265, it really starts to unlock the potential to at the very least retest for all-time highs sometime in the next several months, right? I think that becomes a very real possibility. But again, that's kind of what I'm seeing right there in terms of that cup and handle pattern. Now, why did I say that I think that maybe on Monday we can move a little bit higher? Well, let's go over to the 1 hour chart, for instance, right? On the 1 hour chart, we had a pretty decent, move up towards the end of the day, right? We didn't actually break above the high of the day, right? The high of the day was, of course, we go here, right? The high of the day was somewhere around this 255.5, we'll say, right? We didn't actually break above that. So there is still a bit more work to be done. But if we break this high that we had today, sometime, let's say Monday or even pre-market or whatever, I do believe this unlocks the potential to move to about 255 to as high as 265. I do believe that's possible. There was some strength going into towards the end of the day, and there were some pretty decent calls coming in. For instance, we had a where is it? There was about a 1.45 million call came in pretty much within the last half hour of the day. 180 strike for July 19th. That's pretty substantial. That's out of the money. That's pretty sizable. Like, this to me tells me the fact that there's probably a bit more room to run. I don't think it's that much more room to run. Again, I'd be genuinely surprised if we break above 265 right here, right now. It's not impossible, but even then, that's still another 5% move to about 265. That is still a very real possibility. I did enter a small bullish position on that, right? And I'll pretty much exit it if we really start losing 250. So it's a pretty good risk versus reward, in my opinion. I'm risking like $2 to gain about $15. I think that's extremely worth it. Again, granted, it's a little bit smaller of my opposition than I would normally have, but you know, there's promise there. There's promise that we move up higher even more on, let's say, Monday, for instance, or just maybe sometime next week, right? But again, I want to make it very clear. I do expect us to potentially reject somewhere soon, like somewhere around this 255 to 265 level. Even though I think it's unlocked, I do believe that area to be potentially an area of rejection. And if we don't, and if we somehow break above 265 and start closing daily candles above that, then honestly, this overbought condition just pretty much means diddly squat for a bit longer, and we probably move up even higher. honestly, that's just, it is what it is, right? We'll see how it actually plays out. Now, the one caveat here, and the one thing I will give the bears, I mean, the bears need a little bit of help right now, so I'll give them a little bit of hopium, is the fact that on the daily, we did print a hanging man candle, right? A hanging man candle, of course, is going to be a candle that, well, it looks pretty much like this, in this case, an uptrend, right? And it's exactly what we have printed right here as I zoom in on this hanging man candle, right? So keep that in mind. That is something to note, right? And you can see some examples right here as I open this up, some examples of what it looked like. This was back on Facebook or Meta stock way back when. You know, massive rallies, massive rallies, hanging man candle. This one's green, which is pretty much what we set up right here. This one's red, right? And then you can see it followed up with some, you know, red days and some cool off following that for about a couple of weeks or so. This is what I personally can see happening on Tesla. And this is probably what the bears are hoping for right now, that this candle leads into that, you know, couple week maybe correction or so, right? Maybe a week, maybe even a few days. I mean, honestly, who knows, depending on how fast and severe the correction is. But, you know, that is a potential hope for the bears right here, right now. And it's not something to completely ignore. This is why I'm not going in with a very sizable bullish position. I entered to something with a pretty tight stop, honestly, based on how this goes, because this could be a sign of a potential reversal, and the correction could begin off of this. Because again, even though we did break above this trend line, not the most convincing break. Now, something else I'll feed to the bears, because the bears, I think, really deserve something here, right? They really deserve a bit of a treat here. Is going to be this. This is pretty interesting. So if I'm on the log chart, which I am, right? If we take this green trend line and we start from this low over here all the way back at $22 per share, connect that to these lows over here that we had not too long ago, right? Connect these candles right here, and then we connect it. We pretty much just let the line move up like per normal. You can see it connects to these little levels right here. Maybe we had this massive breakdown. We came back up, retested it, and continued down even lower. Well, you can see this move up right now. In theory, and I don't think this will happen. I honestly don't think this will happen. It's just more of food for thought, just kind of bear porn, I guess. This move up right now, this weekly candle, pretty much is just retesting the exact same thing that we retested on these weekly candles back here that we rejected on several times and moved down even lower. So in theory, this could just be a massive retest once again on the exact same trend line that existed pretty much many times already, that has not only been as support back here, but also acted as a resistance. And we're technically coming back up into it as, well, resistance. Just food for thought. Again, if this actually is true, this could still be actually quite bearish, honestly, because again, until 265 is broken, which will also break this trend line, technically Tesla is still in a long-term downtrend, in my opinion. That's probably the most important pivot level. So this is just bear porn. Again, this is pretty extreme. I don't think this will happen, but if this in theory were to happen and we were to move, you know, look 1 year out and this actually were to play out, this would be quite bearish. And I think we'd go actually substantially lower from here. Again, I don't think it'll happen. I'd be surprised if it does, like pretty genuinely surprised if it does. Just bear porn, honestly, and just something to consider potentially in the back of your mind. But again, I think the probability of something like this actually occurring and really playing out, less than 10%, probably less than 5%, honestly. Very, very low, but it's still technically there. It's something that I saw, so I figured I'd mention it regardless. Now, overall, options flow, pretty bearish, bullish rather, all over the place, right? But ultimately, Tesla, you know, nowhere to be found on the bullish and bearish flow regardless, right? So keep that in mind. Actually, it's down here. You can see 4 million. So nothing too crazy. A lot of profits probably taken. In terms of options sold, a lot of options being sold, but a lot of options or puts being sold as well, right? So you had a 1.1 million put being sold here for 240 for November 15th, for instance. Pretty bullish in my opinion. But you also had a 1.6 call being sold for 250 strike December 19th, 2025 even. So that's pretty bearish. You had another one here for June 20th, 260 strike. So it's a little bit out of the money, but 1.3 million. So they clearly don't think it will go much higher than, well, 260. I have to say, I probably agree with that, right? So we'll see how this plays out. But again, I'm a little bit mixed here. I am leaning slightly bullish Monday, but I think Monday could be a massive bull trap, especially if we do run up into a massive reversal. I think that's a very real possibility. But again, the way I look at it, very simply, if we do break above pretty much today's high of pretty much 252.5, I think it unlocks 255 to 265. I think that's a real possibility where I do think we will probably start topping out pretty substantially. I will exit my position there. Or if we lose pretty much 250, honestly, if we really start losing the 250s, I'll probably exit my position as well. The daily chart, stochastic, you know, it is starting to curl out a little bit here. It's still pointing straight up, but it's starting to slowly begin its curling, but I wouldn't put too much weight into that just yet. It's still definitely looking pretty solid. Overall, everything is still technically bullish, right? All the indicators are still technically bullish. It's just they're very, 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 very overbought. My band's regression, you can see the market, I mean, the bands still can't even keep up with the daily candles, right? This is a pretty rare occurrence. This is definitely an anomaly. This doesn't usually happen, but obviously with Tesla, sometimes it does happen. But you can see we're well above the bands as well. So again, this is pretty rare, and this just shows how extreme this overbought level is. This is just essentially a short squeeze. Can have more room to run a little bit higher to 255 to 265, like I said, but I'd be surprised if we go much higher than that, and I expect a rejection there, if not from this daily candle right here, right now. So we'll see how Monday opens up. But all in all, thank you so much for watching, ladies and gentlemen. Hopefully this helps you out a little bit here, but we're entering some pretty interesting situations here. But if we do form that cup and handle pattern and we start forming this handle, I think that's going to be very bullish. I think the opportunity will be phenomenal. And if it does play out, I think Tesla will explode to all-time highs over the next year or so. I actually do believe that pretty strongly too, if of course that pattern sets up and plays out as I expect it to. So anyways, all that being said and done, thank you so much for watching. And of course, as usual, I'll see you for the next one. Peace.